Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In today's video, we are going to talk about one of Warren Buffett's favorite stocks in my opinion. He's been buying a lot of this stock. So I figured let's take a close look at this stock. So if this is something you're interested in, sit back, enjoy it. As always, please remember this is not financial advice. This is just me sharing. With that said, if do me a favor, hit the like button and hit the notification bell if you haven't done so. With that said, let's take a look at this company. So the company that Warren Buffett is really liking is Occidental Petroleum. Ticker symbol is OXY. This is a company that engages in the exploration and production of oil and natural gas. So one of the things that I find interesting is they talk about the zero in. So they're taking steps to lower carbon future. So if we go through the presentation, you can see their pathway to net zero. So Oxy has set the following goals, among others, to achieve net zero across our total emission inventory according to the Paris Agreement. So they have a goal about 2050. If you look over here, is they take pride in being the first U.S. oil and gas company to set a target for achieving net zero for scope 1, 2, and 3 emissions. So that's pretty awesome in my opinion. I think it's a company that wants to be energy green, so I can see why Warren Buffett likes this company. Now if we go to Yahoo Finance, you can see PE ratio is about 7. The 52-week range, the high is 23, the low is 23 and the high is 57. You get your forward dividend yield and then your ex-dividend date right here. And then if you look at the chart, it's bullish. Performance uplift is bullish. Going down to some of the earnings over here, you can see 4 beats for the past 4 earnings. The next one will be in November 2. If you look at the financials, you can see in 2020 the earnings went the other way, but then now in 2021 you can see the revenue has gone up as well as the earnings. Looking down through the trends, you can see 15 holds, you got 3 buys, and then 4 strong buys. Recommend rating is between a hold and a buy. The average price is, the average is 76, currently it's about 74, so you're getting below the average at this point at the time of this video. Now if we go over to top institutional holdings, you can see Berkshire Hathaway has been buying a lot. They have all these shares, followed by Vanguard Group. You got State Capital, you got Dodge & Co, BlackRock. So pretty well-known institutional holdings putting their position. You can see Berkshire Hathaway has been putting a lot lately. Now if we go to Yahoo Finance at August 23, 2022, there was an article, What's Behind Buffett's Renewed Interest in Occidental. So if you get a chance, read this article. You can see in here that Buffett likes businesses that generate a lot of cash. Oxy fits that merit, generating more cash in quarter 2 than all of Berkshire Hathaway's energy. A little bit more about it, they talked about the clean energy solution, as well as the renewal footprint, and then they have all these other things. Definitely go check it out if you want to read a little bit more about it. It tells you a little bit more about what they feel about this company. Now if we go to Seeking Alpha, so one of the things I wanted to do is compare the performance of the year to date based on the S&P 500 versus Oxy. You can see Oxy's in the orange or red, and then the S&P 500 is the blue. So you can see pretty good year. But if you go to the 5-year one, you can see that the S&P 500 has been performing better. So we'll see how this goes in the next couple of years. If you go into 3 years, you can see the Occidental has gotten better in the 3 years. So definitely something for you to consider. Now moving along to Simply Safe Dividend. Based on their dividend safety score, they rate it at 60, which is borderline safe. The dividend yield is 0.69. Market cap is about 68 billion, which is considered a large cap. Looking over to the key metrics, you can see payout ratio is 4%, which is very low for all producers. During the recession, they have increased their dividends. And in here, you can see the dividend growth for the last 20 years has been negative. The last 5 years is in negative 58%. So it was going up, and then it's just steady going this way. And then after that, you can see a plunge. So I'm expecting it'll go back this way. Look, if your payout right now quarterly in the months of January, April, July, and October, and then your payout would be about 52 cents per share. Ex-dividend date, if you're curious when it is September 9th, which is 15 days away at the time of this video. Looking forward to some of the key metrics. You can see sector PE ratio is about 8, the energy is about 8.3. Now looking over to some of the information, you can see total sales in billions. You got the return on invested capital. You can see a big jump from the last 12 months of 20%. And then you got your return on equity about 48%. So based on 21, you got 14, and then 48, 7% to about 20%. That's a big jump right there. Now moving along to Rebo, based on their analysis, 28 of them said it's a whole majority of them, about 53%, a buy of 28, and then a strong buy of 10%. Price target in the high of 110, average of 76, and then you got your low of 52. If you're looking for a platform that you want to start investing, you can try Rebo. If you use my link, which is in the comments down below, you get 12 free stocks when you fund a new account. So that's something for you to consider. Now if we go to bar chart, based on bar chart, their technical opinion, it's a strong buy. 88% said it's a buy. Now looking down to some of the rating, you can see 16% said it's a strong buy. You got 7 strong buy, 8 holds, and 1 strong buy. You can see here the price performance for the past 1 month is at 22%, 3 months is at 15%, 52-week range is about 200%. So moving along to Simply Wall Street, you can see based on share price and fair value, they estimated this using the discount cash flow model. Fair value based on their calculations about 104. At the time of this video is 74, which they rated as 28% undervalued. Now if we go lastly to Robinhood, for today they were up like 1%. For the week it's up 17%. For the month it's up 20%. 3 months it's up 14%. For the year it's up 208%, and then the 5 year is up only 26%. So looking at their analysis, you can see pretty similar, a hold of 48%, a buy of 41%, and a sell of 10%. So I like this company. I think it's a solid company right now. Warren Buffett, I believe in Warren Buffett. I think he is the GOAT of dividend investing, so he probably knows what he's doing. So if he's putting in money in this company, he probably knows that it's going to generate a lot of money at some point. So at some point I would like to probably start putting my position in there. I think right now I want to wait for it to maybe have a dip about 70, then I'll start putting in 1 or 2 shares, and then eventually dollar cost average maybe to about 25, 30, maybe even 50. But then I'm more towards the Exxon. I like the Exxon and the Chevron. So definitely something for you to consider. Thank you so much for watching, guys. There are other videos as well, so if you want to check out some of the other videos that I put out, definitely go check them out. As always, please remember, this is not financial advice. This is just me sharing. Thank you so much for watching, man. Please be safe out there, stay cool, and keep investing. And I'll catch you guys in the next video, right? Take care. Aloha.